Welcome everyone to your pathway to home ownership benefit costs with BMO housing loan programs. A few housekeeping items. This webinar is being recorded. A recording will be available on our site at www.sanpabloedc.org. Any resources mentioned during this presentation will also be available on our website. Please note all attendees are muted. If you're having an issue with audio, you may need to click on the right-hand screen to enable audio. We welcome your questions. Please type them in the question and answer box, which is enabled for everyone to use. We'll answer them at the end of the webinar if time permits. A little bit about the San Pablo EDC. The mission of the San Pablo Economic Development Corporation is to act as a catalyst for equitable economic opportunities. Some of the programs and services that we support and help with advancement are employment training and support, home ownership, business resources, and access to capital. If you want to learn more about our organization, please go to our website at www.sanpabloedc.org. Thank you to our partners, Keller Williams and BMO Bank. Now we will have Victor Reyes from Keller Williams present a little bit about real estate and the real estate market.
Thank you so much, Aurora, for that introduction. Hello, everyone. My name is Victor Reyes. I am a realtor with Keller Williams Realty. I am also president of a National Hispanic Organization of Real Estate Associates, and I serve as a committee member on both the California Association of Realtors and Contra Costa Association of Realtors. With that, I'm here to share a presentation for home ownership. So generally when folks are looking to purchase a property, they either come to two people that they speak to first, either a real estate agent or a lender. So in this case, let's imagine that you speak to a real estate agent like myself. The first couple of things that I'm going to do is I'm going to have a sit down conversation with you to kind of figure out where you are in the process. A lot of folks are either ready to go, or a lot of folks really just don't know where to start. So we're going to imagine that, you're just curious or looking, don't really, trying to figure it out. So the first thing that I'm going to do is I'm going to say to get all your, documentation ready so you can talk to at least a lender or somebody that can look at your finances, because that's going to be one of the most important things to really start getting the process going. And the reality is a real estate agent really steps in after you have been either qualified for a loan, because then the real estate agent understands what your price point is. And honestly, based on the price point that you get from the lender is going to dictate where you can potentially purchase the property based on the type of property that you want. Sometimes based on the price point alone, there are some places that, unfortunately, based on, home prices in the area, especially in the Bay Area, will not be able to qualify. So, if we're looking at an $800,000, if that's your max qualification, I don't think Berkeley would be a location in which you can purchase a property just due to how expensive these areas are. But nonetheless, so once you get your pre-approval process, which as you can see here, really what you want to do is kind of sit down with a real estate agent and have a conversation. And that conversation, what that looks like for us will be basically for me to figure out what your necessities are, what your needs are, and what your wants are. And I think there's a huge difference between what you need and what you want. A lot of folks want their dream home generally the first time around, especially because they're so excited to get a home. But the reality is, a person that purchases a property generally sells and buys 3 to 4 times in their lifetime. And so I always tell folks, if this is your first time you're purchasing a home, it is likely going to be, your starter home, kind of something that gets you in the foot in the door, so you can start building equity, so you can start leveraging some potential money that you can build throughout your home ownership process, so you can get to your dream home eventually. Okay. Now, when we talk and sit down and you tell me that you need specific things for your needs and your families, I'm going to basically have a conversation in terms of what that looks like, what areas you want to potentially look at. So, for example, Once that pre-approval is there, the consultation will be, what areas, what kind of family dynamic do you have? Do you need to be near any public transportation? Is anything really kind of important to you? Do you need easy access to the freeway? Is there any special needs that we need to service? Does it need some sort of, ramp, easeway, or anything that is important to you and your family? I think that is one of the things that is key when we have these conversations. The other thing that is really important as well as a real estate agent having a conversation with somebody looking to buy a home is understanding the buyer broker agreement. Now, this is really important in the sense that, a real estate agent has a function to have the best interest of the client all the time. And so, what that's called is a fiduciary duty. We have a fiduciary duty to serve our buyers in the best possible way. And we do that by having honest and upfront conversations to see what's important to you and your family. And so we break down the relationship. How does that function? Uh, how does it function when I deal with people outside in the public or third parties and those things? I basically break down exactly how we get compensated. We look at some of the obligations that I have as a real estate agent and what the brokerage has an obligation to do, because we have an obligation to provide resources for you. We have an obligation to basically do things that you ask us to do, so long as they're ethical and they're in line of what we can do, right? The other thing that we have a conversation with in our buyer broker agreements that is also really important is, what are your obligations as a buyer, right? And what's important to you. And this is why, hiring the right real estate agent is important, because you need to have trust and you need to be able to tell your real estate agent, hey, this is what's important to me and this is what matters. And that can look like various different things. In the past, I've had clients say that, you know, um, electrical stuff in the house is really important to them due to a previous fire that they've had in a past home, or maybe plumbing or some other issues, or maybe noise has been important to them. And so for me, basically, that means that now I need to do some due diligence, do some homework to figure out, okay, well, if this is important to my client, then where do I point them, or what are the resources that we can figure out how to get that in line with them. So, with that being said, I get you the right resources, I get you information, I get you disclosures, I get your reports, and it's your obligation to read them. I, as a real estate agent, also have an obligation to look over them and point out any major red flags that I can see. However, you as a buyer also need to understand that I can't read your mind, so you have to tell me what is important to you, so that we can have a real educated conversation around any questions that you may have. Now, after the consultation and after we go over the agreement and we sign a contract basically saying that you're electing your real estate agent to work with you, or myself to work with you, we start beginning the home search. And again, that home search is generally going to be decided based on the price point and based on the areas that you want to live in. So you may say, Antioch or Richmond or San Francisco or Berkeley or whatever city it is that you're looking at. I'm going to basically give you all the properties in that area based on that price point. So anything that comes up in those areas in that price point, you are going to see and you're going to get. Now, what you're going to do is you're going to evaluate them. You're either going to click on the link or, look online, and you're going to tell me and say, hey, I would like to see, these 5 different homes in these different areas because I want to check it out. Now, sometimes, a buyer or a client may be, really knowledgeable about the area. Maybe they grew up in the area. Sometimes that's not true. And even if you're from a certain area, you kind of need to see the neighborhoods. And you kind of want to see it for yourself, and you want to see the home, and you want to kind of understand, what's happening in certain micro markets. And the reason being is because homes built in one neighborhood are vastly different than homes built in another neighborhood, due to the fact of the age, when these cities were built, different neighborhoods and different things that they offer. So we evaluate properties and we take a look at them. And then once you find the right home, we are essentially going to write a contract, what is called a residential purchase agreement. And that contract is basically going to hopefully, go out to the seller in the hope to accept the contract. Now, when we write a contract, there are some things that the real estate agent is going to do for you. right? The first thing is we're going to look at what offer price you should submit on the property. Now, by doing this, the real estate agent is going to look at comparables specifically in that neighborhood if possible, but just basically in the general area. And we want to look at that because it'll tell us roughly where the market is going. Is it going up? Is it going down? What price points was the last sold comparable? Was it the same? Is it better? Is it worse? Does it have the same kind of views? Does it match the kind of property that you're looking to purchase? And we look at that carefully so you can make a comparable analysis and you can decide on what offer you actually want to make or what offer price you want to decide on, right? And so once you have a decision based on whatever the purchase price is, then we can go ahead and write it into the contract. Now, the contract also has another thing that we need to add on there, and that's the loan type, which I'll let BMO talk a little bit more about that. But there are various different loans. There's definitely FHA loans, there's VA loans, there's conventional loans, there's jumbo loans, there's all various different types of loans. So based on the loan type and the kind of assistance or whether you need assistance or not, we'll go ahead and put it in the contract as well. Okay. The other thing that we need to consider when you're writing an offer is a deposit. Now, this is known as an earnest money deposit, or sometimes called as a good faith deposit. And so, what a deposit does, it shows good faith to the seller that you're actually serious, right? I hear a lot of people say, "Well, you're not serious unless you have some skin in the game," and this is kind of it. It just shows that you're going to put some money into what's called escrow, a neutral third-party company that is going to hold your deposit. And that deposit is actually generally around 3% of the purchase price here in the Bay Area. Okay. Now, that deposit does have a safety net, which is called contingencies, which I'll talk about in just a moment. So your deposit is generally 3%. So that'll be included in the contract in itself. Now, the next thing that's also included in the contract is your down payment. Right. So your down payment can come from various sources. It can come, in the forms of cash, assistance programs. It can come from gifts. It can come from various different things. And so, down payment can vary as well. It can come, in a form of 0% down or, 3.5%, 5%, 10, 20. There's various different down payments, and that will also kind of dictate in terms of what your mortgage is going to be or what it's going to look like towards the end, which again, BMO will discuss at a further in more detail. But the down payment is also a part of what we write into the contract. And then last but not least is your contingencies. And so the contingencies, there are three major contingencies that a buyer generally has, and that's the inspection contingency, the appraisal contingency, and the loan contingency. And these contingencies are the protection for your earnest money deposit. As I mentioned, generally you're going to put 3% into a company called escrow, which is a third-party neutral, neutral third-party company, and they're going to hold this money. So it doesn't go to the seller, it just goes to this third-party company. And now the contingencies protect that deposit by holding it so that you can actually do your due diligence for this home. Now, the property condition or the inspection contingency allows you to actually do inspections on the home. If it's a single family home, typically you're going to do three different type of inspections. You're going to start with a home inspection, which just kind of generally looks at the condition of the property, structure, foundation, plumbing, those type of things. You're also generally going to do a termite inspection, which looks at any wood damage or any termite or wood boring beetles, anything that has to do with water damage and things of that nature. And then generally a roof inspection as well, too. You want to kind of see if the roof is in good condition. And again, this is for a single family home. So typically these are the inspections that you do on a single family home. And then after you get the inspection done, you receive a report, which you get to review again with your agent as well. And if all looks well, then you can go ahead and continue with the process of the property. Sometimes, depending on how, the market is or how desirable the home is, you may potentially be able to negotiate based on some of the findings that you get from the inspection reports. So that's also another good reason why you want to do inspections on the home. Now, the other two are loan and appraisal contingencies. And so basically, those are contingencies that allow you to get an appraisal done on a property, which, it provides a value to the lender. And the loan contingency is basically time for you to get your loan finalized and approved. And so these contingencies, again, if there's an issue or if you find something in which you want to back out of the contract for any reason, these contingencies protect your deposit, and in case you do want to back out, then you get that deposit back to you. And if you want to continue and everything looks well, then you can go ahead and remove all contingencies and move forward with the process of purchasing the property. So yes, so again, when you're writing the offer and the inspections, these are the three most common ones: the roof, the physical inspection, and the structural pest inspection. One thing that I will mention here in the Bay Area, there are some point of sale ordinances, particularly around the 80 corridor. And so anything between Hercules all the way down to San Leandro, we have what's called a sewer lateral ordinance or requirement. And what that is a requirement to have the plumbing inspected from the main house all the way to the city's main sewer line. And sometimes, a seller takes care of it, so a buyer doesn't have to, or other times, maybe an inspection is done, but they want the buyer to take care of it. So it is a negotiable item, but it is something to consider. And then, of course, the other thing too is that different cities or different places have different ordinances. San Pablo has a residential inspection that needs to be done. Berkeley has an energy saving ordinance. Oakland has a sidewalk ordinance. So there are various certain ordinances that you need to be aware of. So this is why it's really good to have an agent to kind of guide you and point you in the right direction, because some of these things have additional costs to them that are outside of lending costs. Okay. Now, the other important thing, and this is kind of big in California, is home insurance. So, aside from the contingencies and everything else that you got to consider, home insurance is actually one of the most important things as well, especially because home insurances here in California have either gone up. There are some insurance companies that may potentially be leaving California. And so it's good to go be proactive and look at the home insurance right away. So you get into contract, you're going to put in your deposit. You're going to start doing inspections. And while we're waiting for reports from the inspections, it'd be good to start shopping for a home insurance and get a quote, so you can kind of see what type of cost that's going to be, because also it may potentially play an impact on the loan. Now, once you have all your contingencies removed and you've got your home insurance and you love the house and you want to buy it, essentially what you're going to do is you're going to sign documentation, what is called closing disclosures, in front of a notary, to verify that you are who you are, to verify the information that you received. And once that information is received by the escrow company, they go ahead and record it with the county. And once all that information is recorded with the county, you are essentially a homeowner. So your real estate agent will, meet with you. It'll be a good time. It'll hand you keys. It'll be a very, very celebratory kind of day because, you finally got into your home. And so there's various process to get there, a few steps, but with a good real estate agent, somebody that you can trust and know, then this is an easy process, one step at a time, because in reality, there's no shortcuts in real estate. And yeah, and that's about it. That's about the process on the real estate side. So I will turn it over to BMO from here.
Thanks, Victor. Big thumb up for you. You made this almost a transaction roadmap is easy to understand and going through very smooth touch point, very significant steps. So everybody should be watchful and be mindful and be careful. So, which is, I'm going to matching your first section after you talk to Victor. Now we turn to look at it where we can get the money to purchase the house. My name is Emma. Don't mind me. I'm actually today stepped in for the real presenter, Cesar Polito. He is our mortgage lending officer. I'm going to share my screen. Started with, just say, tell me you can see my slides. Slideshow. Okay, wonderful. So from beginning. This is a Caesar's contact information. Anybody interested, especially after you learn what we can offer in BMO and kind of interested to talk about the options, definitely get in touch with Caesar. So we're not going to show the movie clip at the, I want to show at the end. Let's move on to a couple of so let's start it with some questions. I know financing is a big part of the home purchasing and it's very significant. Also, not only the big part, but also a very emotional part about the transaction. It's everything involved in money. People are thinking, affordability. People are thinking is a lot of risk taking, everything. So let's start to break some myths for us, for all of our public, and to say, is this the right time to buy? And where I can get the money, and how can I get the money I need for this transaction? First myth is, do you need to have a 20% down payment to buy a house? The answer is you do not. It's not necessary to have a 20% down. Why is 20%? 20% is normally is a risk factors for the lender to gauge how big the risk to lend the big size of money. If in the transaction, the buyer come in with 20%, that shows, the buyer shows the state to the lender, they have a lot of money reserve, and they also buy in the equity up front. And that will make the lender feel much more secure to lend the money. So that's where this 20% coming from. And also there's another concept related to this 20%. If you don't have 20%, can you buy the house? Yes. Currently, what's the minimum down payment that we can do for buying a house is 3%. And even that 3%, you can still get some down payment program to help to purchase the house. So that's related to this. Second point is probably in some cases, you may just need as $1,000 from the own funds to purchase the house. That's everything is possible. Now, where we can get the help for this down payment piece to gauge this gap, well, technically currently in our market, there's a lot of down payment assistance programs in the city, in the county, and in the different local lenders and the nonprofits. I just mentioned a couple of you, especially, San Pablo EDC, our strategic partner here. They have their administrator for WISH program. WISH program is a San Francisco Federal Home Loan Bank issued a affordable specialty lending program, currently gave the people in California, certain area, the down payment assistance program, the loan size is about 29,000. That 29,000 actually at the beginning part of sound like is a loan. That means is you borrow money, you have to pay back. But with one condition, if you meet that condition, that whole 29,000 become a rent. That means is the person purchased the house with that down payment assistance program has to stay in the house as a primary residence for 5 years. With that condition, you walk away with this 29,000 without any payment back. So this is the type of down payment assistance program available for the home buyers in the area can help you to do that. In BMO currently, we have the program add up together can get leave the home buyers up to 45,000 to working with the transaction. So those are the help out there for our home buyers to be aware and also to be mindful and check with the lenders and to say if I cannot get help. Now, talking about purchasing the home and get a lender, we need to see how can I get a qualification, right? You qualify for a mortgage. You qualify for the mortgage, and then we are going to, as a lender, we're going to looking at it, a couple of facts, do verification and checking and rechecking the background about the buyer's financial situation. Here are some facts we definitely need to verify. Income is one, because income is the major thing to support the loan payment. Employment is another, because employment is going to guarantee the future income source. Then the credit score, this is means is the buyer's credibility in the past, and also predict for the future. If something happens, what the buyer's ability can handle the large liability. And then the next thing is like the asset and liabilities. What's the asset mainly is how much money the person is having or is going to have. Liability is basically is the debt in the household currently and for the future. So those are the facts from a lender's perspective we're going to looking at or verify. And then we are going to discuss to qualify the people for down payment program. Down payment program almost similar to the lender qualify the mortgage, but is slightly different because they are going to looking at one thing very specific is property location. Why is property location is matters much in the down payment system program part? Because all those down payment system program we care are very localized program. They are not going to be for the very large, cover the very large area. So the biggest one probably is a statewide. The national wide, there are some national program, but it still come down to the state. Each state will have some tweak to let the system meet the state specialty, meet the state special features. So that's why the property location is very important for the down payment system program. This is also trigger some thoughts for the home buyer to think about it. If you are going to decide it or focus on to purchase some property in a certain location, and also using the down payment system program, you do need to looking at the down payment system program in that specific location. If you change the location, the down payment system can be varies and maybe totally different. So that's something food for thoughts. BMO Welcome Program, I'm using this as a example to give everybody some taste for down payment system program. Behind the curtain, how the lenders organize or structure this type of a program and how they make the qualification of this program. So BMO currently, we call it is Welcome Home Grant Program. This program is one name, Welcome Home Grant, but it actually has 3 layers. And these 3 layers can be layered on top of each other, or they can individually establish by themselves. So the first one, a lot of people read this slides, is MMCT. What is MMCT? Is Majority Minority Census Tract. So this is related to our American census tract zoning for income for the property locations. If the house is located in the low moderate income or middle income or upper income zoning area, so they means something for the community. If this specifically for this grant, if the property is located in the low to moderate income, now this property itself is going to qualify the person coming in to buy this property for 6,500. So this is a one grant program. Then the next one we call the minority grant. Minority grant is on the top of the first one. If the person purchasing that property is minorities, the buyer themselves, that's get 6,500. And then the last one is if the person's income is low moderate income, plus the property is also low moderate income census tract, and then they can get extra another 3,000. So those add up together is a 16,000. Of course, all these grant, there are some foundation or condition for qualification is income, because here is the thing, talking about the down payment assistance program, because it's a system program, where really assist people need money. So that's why the income piece come to play. We're not really using the money to assist the people have plenty resources there. So or plenty money, we call it as rich people. So that's why is to be mindful for that. If we are talking about the down payment system program, we normally is talking about people need money to purchase the house, and normally is going to have income restrictions. And this is our typical flyer for that. And there's another program I want to using as a sample is beyond everybody talking about a standard or classic down payment system program. We're looking at a house census tract. We're looking at the income. There's another piece of down payment is going to go for the special field, special space, just like this one. This one we call the HBCU PBI Home Buyers Assistance Program. What this program basically is for the graduates of historically Black colleges or the predominantly Black institutions, the academic institutions. If people graduate from those universities and the education institutions, guess what? They are going to automatically qualify for this $6,000 grant. This is also grant. And we listed a couple of things to just showcase, like Chicago State University, Kennedy King College, South Suburban College. So those just keep in mind about this is when we talking about the down payment nowadays, the down payment system program almost can be coming from different sources for the different type of specialties. And then another one is also a sample. This is a current one, is working at this moment, is effective, is official right now, working every day. This is basically is California Association of Realtors, the Home Pathway to Homeownership Closing Cost Assistance Program. So this money is giving person to any purchase in California. This is a statewide program. For anybody purchase in California, if you qualify for this program, the program will give up to $10,000 just for closing cost. So this closing cost can layer with other down payment. You can imagine if you have studied the local down payment system program, do some research, gather all the information, and get all these pieces together, we can get a down payment for down. We can get a closing cost for cover the closing. And then what? We have the first mortgage to cover the big chunk purchasing money. It's possible the buyer can walk out the door with the house, but very minimal cost out of the pocket. So with that said, it's very, very possible the person can do 100% financing for home ownership. 5 steps towards home ownership. We normally working with the realtor friends like Victor. First and foremost, we do pre-qualification. This pre-qualification or pre-approval will do overview of verification for buyers' credibility and affordability. And with the pre-approval letter is gave assurance for the buyer and for the real estate professionals or agents helping the buyer to assure everybody this buyer has some a guarantee to get money to purchase the house. So we'll provide a peace of mind for everybody, and also will direct people's work, because like earlier Victor said is, well, with the pre-approval, we will dictate, where we can buy and how to research and do all those backup work for finding the house, ideal house. So this is will going to be decided that. The second one is after the buyer find the house and get into the transaction. Now the full processing of the loan application is started. In this case, we're going to verify the property, verify the purchase parties, verify the more verification about the loan status and loan conditions, and also evaluate the property, everything and anything. After all this put together, this put together piece, we call it is processing. And there's a lot of mini steps in this processing. So it's definitely take some labor work, take some mentality to get this processing from A to Z. In that processing, we also say who is going to give the final decision for the loan. We call it as underwriter. Underwriter is the judge of the lender part to decide how much money the lender is willing to lend on this property, and also willing to lend to this buyer, specifically purchase this property. And then at the end, to the finishing line, we're closing. Closing is all the parties get together. We already double check, triple check all the points, and make sure everybody put their true identification on the paper, sign the documentation, and exchange the keys, and close the deal. Well, here is something we do want to prepare our buyers ahead of time to get some mindset. We call it, is in the industry, we call it set expectation. So this type of questions will give you some set that mindset. Do I have to pay this money back? Absolutely, yes. To borrow money from the lender to purchase the house, the major loan we call the first mortgage, that's definitely is a payback. For the down payment assistance program, it depends. Some of those down payment assistance program is loan. That means you have to pay back, just like carry the similar significance like the first mortgage has to pay back. If we default on the down payment assistance program, can also jeopardize your ownership of the house. It doesn't matter. You said, well, I only borrow $35,000. I don't pay that $35,000. So it won't be a big deal. That is the big deal, because that normally the down payment assistance program, the money is coming from a public money pool. That means is everybody's money. So in that case, that's can consider to be a federal debt, is going to be on the tax, is going to chase after for a very long time. So that's why pay the money back is number one consideration. But some of those down payment system program, like I said, if a lender, our welcome grant, that's a grant. Grant means it's a one-time money out. There's no need to pay back. For those type of money, you don't need to pay back. It's just for our buyer to understand what's the detail of this money source. What kind of money do I need to pay out of my pocket? Well, this is actually a very interesting question. Out of the pocket money, that means is I'm going to pay out of my pocket. I'm going to put money down here. Normally, at the closing, a lot of closing costs, we call it as a transaction cost, is going to roll into the transaction. But there are certain the cost or transaction cost is not or cannot be rolled into the closing cost at the end. So what are those? Normally, we're talking about some third parties service fee has to be paid before the transaction finish, because we need those type of service performed and get a result of those services to complete the transaction. What are those services? Appraisal is one, inspection is another. Sometimes we may also need some repair work done. So those type of costs can be ahead of closing transaction, and that type of cost probably may be out of a buyer's pocket. So that's just to be mindful for that. Are there any other ways can help to minimize that cost? Yes. So it depends on the situation. Sometimes the seller can come up, be generous to say, I can cover the inspection fees, which is, Victor, you probably already experienced so many and so much about those. So definitely people can be generous. And also they third-party service providers can give a discounted price for their services. So that will help the home buyer to minimize cost. How long can be this processing take? What we see this processing means the whole from the time you got the contract to the end of the time you sign the paper. Normally, this is between 30 to 45 days. Sometimes can be short. We do see some of those transactions can be 3 weeks if they get a loan. If some cash deals, they may be closed by 10 days. That's possible too. So but in general, we are looking at is 30 days, within 60 days will be done, can be done. Also, there something is be mindful. If you are going to do some special program, for example, people say, I buy the fixing upper. I'm going to using the FHA 203 B1 loans, and those type of loans may need a longer time to do the work. So you got to consider your closing time is out of this category, is two different scenario there. The other piece is what is the minimum credit score required? This is a very, very interesting question, and also is the most important question, because credit score is going to decide or dictate a lot of things in this transaction. First of all, will dictate what type of a program you're going to qualify. The other one is credit score can decide your pricing. So that's going to be a very, very important. A lot of people don't know where's the pricing coming from. Most of the people's pricing tag is going to be decided by the credit score. So credit score is higher, your money is getting cheaper. Price score is lower, the money is getting expensive. That means the interest rate is high. That's totally related is how people handle their debt. handle their financial situation, the whole financial portfolio reflection there. So that's something be mindful. Way before you decided you're going to purchase the house, we probably start working on to fix the credit, to minimize the debt, to make sure there's no mistake on the credit report and all those. Certain program has the score requirement. Now the GSE, we call the Fannie Mae and Freddie Mac, the conventional loans universally started with a 620. Certain special loans like VA loans started with 580. Some of those jumbo loans or portfolio loans can go up to 700 above for the person to even think about to take this program. So those are the information definitely I want the buyer to be aware, to be mindful about it. That's pretty much cover our lenders piece. I would say lending processing is quite hard working. Don't underestimate this, and especially a lot of buyers are thinking, well, I have the lenders is going to take, I just tell them what I want to do, and then they will just do whatever and helping me. This ideal situation is supposed to be that way, but in reality, it's not. So definitely, as a buyer, as a consumer ourselves, we do need to educate ourselves to start with. That's why we in the community there's a setup like this, the home buyers workshop, and also HUD set up the HUD first time home buyer workshop, a certified workshop to teaching people understand from A to Z about the whole home ownership. That's also include post purchasing. After you purchase the house, what do you need to be aware? How you utilize the house to building the wealth in the future. So those type of things definitely out there for our consumer to utilize and to get the resources, get a reference, just to be open up mind, open ear and eyes for that. So we're here as a professional to help and assist and support everybody. I put it on the side is my loan officer's contact information. And if you thinking, well, that's maybe we should have started from here, let's connect it and discuss. So also it's talking about the house market update and relationship and market trend. Victor is good resources too. So we're here for support. With that said, my time is up. I'm going to stop sharing and back to the host. Thank you very much.
Thank you, Emma, for taking the time to present with us today. Thank you also to your colleague, Cesar Pulido. We have here Cesar's information on our left, and we have Victor Reyes is on our right. We have my colleague Sepidas on the top. If you guys have any further questions, I am looking at the Q&A right now. I don't see any questions. Let's give it a minute, see if someone does have a question in regards to the presentation today, or in general with real estate. See if there's any questions. Okay, I think we have 2 real estate questions, and this is directed to Victor. How will you tell me about the newest homes on the market?
Thank you. Yes, so every real estate agent has access to what is called the multiple listing service. And the multiple listing services connects all the brokers, anyone who's a real estate agent, when they put in a listing or a property into this database, you can say, then it populates to all the real estate agents. So for example, if you know, if a client is looking for a property that's around 600,000 in the city of Antioch, and a new property comes on the market that's $600,000 or less, that hits all the criteria, then the real estate agent gets notified right away. We can also set automatic emails, so we can send it to the clients right away as well. So as soon as the property comes on the market, then they get notified, we get notified, and everyone's on the same page in terms of that property coming on the market.
And for BMO, real quick, do I have to pay any of this money back in regards to the type of programs that BMO offers?
No,
Or
BMO offers, if you refer to the Welcome Home Grant, for the grant, no. And for some other down payment system program, yes. For BMO Welcome Grant, no. There's no repayment back.
Okay, let me see if we have any other questions. I don't see any other questions in the question and answer box, but again, thank you to B. Merrill, Cesar Pulido, and Emma Biggie, and to Keller Williams, Victor Reyes. Thank you for taking the time to present today. As mentioned before, your presentation will be on all our social media as well as on sanpabloedc.org's website for more information. Thank you.
Thank you so much for having
Thanks to everybody.